Ladies and gentlemen, good day and welcome to Q3 FY23 earnings conference call of GATI Limited, hosted by ICICI Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit from ICICI Securities. Thank you, and over to you, sir.
Yeah, thank you, Seema. Good afternoon, everyone. On behalf of ICICI Securities, I welcome you all to Q3 FY23 earnings conference call of GATI Limited. We are pleased to have with us management team represented by Mr. Feroze Sarkari, CEO, and Mr. Anish Mathew, CFO for GATI Limited. Without much ado, I will pass on the call to Mr. Sarkari. We will have brief opening remarks from the management followed by a Q&A session. Thank you, and over to you, sir.
Thank you, Amit. Good afternoon and a very warm welcome to everyone on our Q3 FY23 earnings conference call. We have uploaded our results and earnings presentation on the stock exchanges and company's website, and I hope everyone had an opportunity to go through the same. As mentioned, along with me, I have Mr. Anish Mathew, the Chief Financial Officer for GATI Limited, and our Investor Relations team. I will share industry and business overview, and then will hand over the call to Anish to discuss the financial performance of the company for the quarter ended December 2022. Before I start with the business overview, I would like to share 2 organizational updates. We have appointed Mr. Shrikant Nikam as the Vice President Operations. Shrikant comes with a rich and diversified experience of over 25 years across supply chain logistics, information technology, and industrial engineering domains. In past, headed diversified businesses in Mahindra Logistics, UPS, and GATI. Mr. Charles DeCosta is now heading the Transformation Office as the Chief Transformation Officer to bring in focus on transformation initiatives throughout the organization. Starting with business performance, GATI has recorded its highest ever quarterly operating revenue of 441 crores. The company has achieved this feat by bringing in operational efficiency and enhancing customer delight by improving service levels. The team at GATI is committed to improving customer experience, which leads to more wallet share, along with increasing the market share, thus translating into better performance. The logistics industry is poised for exciting times ahead due to its pivotal role in the Indian economy. The demand for logistics services is expected to grow as it will be instrumental in accelerating and sustaining the GDP growth. The government recognizes the importance of logistics as a sector. The initiatives announced in the recent Union Budget for FY24 will enhance the logistics competitiveness. Growth in capital expenditure on infrastructure development such as rail, energy, roads are likely to aid in cost cutting, supporting the national logistics policy. The push to the multimodal connectivity and supply chain development with increased focus on technology and digital enhancement will have multifaceted impacts on the industry. The Urban Investment Development Fund will enhance connectivity and provide faster transportation in Tier 2 and Tier 3 cities. Government incentives along with improved sentiments will lead the nation on the path of sustainable growth. Our foundation to growth is dependent on infrastructure amplification, digitization, sales acceleration, and consistent efforts to improve our operations. Our twofold focus on customer centricity and cost rationalization has helped us improve our performance. I would now highlight the initiatives during the quarter under each of our pillars. Sales acceleration. During the quarter, the company has elevated 30+ strategic accounts to key enterprise accounts due to increased wallet share from them. The company has also identified alliance partners for strengthening our pickup and delivery operations. We have started digitized network planning through use of data science and will continue to focus on this. The company has also initiated a nationwide RFQ for price discovery and negotiations with both old and new network partners. Infrastructure. I am pleased to announce the launch of our much-awaited Super Hub at Mumbai. This hub is a consolidation of 3 hubs in one location, which will bring in a lot of operational efficiencies. The Mumbai Super Hub is spread over an area of more than 100,000 square feet, equipped with 62 bays for effective loading and unloading, which can handle 130 vehicles and an average weight per day of more than 1,000 tons. With this, 4 of our hubs are now operational at Farrukhnagar in north, Guwahati in north, Nagpur in central, and Mumbai. These hubs are well equipped for effective cross-docking facilities and mechanization for loading, unloading, leading to improved turnaround time. Technology.
Notes.
We
I'm
have
sorry to interrupt.
100%.
Management, sir. I'm sorry to interrupt, sir. So you're breaking up, sir.
Sorry?
Your line is breaking up, sir. Just allow me a moment. Ladies and gentlemen, we have the management line reconnected. So please go ahead.
Thank you. So on the technology front, we have completed 100% deployment of digital dockets with retail customers, which brings about better visibility, transparency, and compliances of processes. I would also like to highlight that during the quarter, GATI started electric vehicles for first mile and last mile delivery at Delhi, Noida, Kolkata, Bangalore, and Hyderabad. This has been done with a focus on ESG and also to supplement the cost reduction program. The industry is witnessing a shift from unorganized to organized sector, and we at GATI Limited are constantly working towards increasing our market share. We are devoted to seize the opportunities paved by improved demand, incentive policy, and government push to the MSME and retail sector. These factors will lead us to achieve the right target customer mix. Lastly, we remain aligned with our vision to maximize value creation for every stratum of society. With this, I would like to hand over the call to Mr. Anish Mathew, our CFO, for financial highlights for Q3 FY23. Over to you, Anish.
Thank you, Phil. Good afternoon, everyone, and very warm welcome to our Q3 FY23 earnings call. I'll take you through the highlights of financial results for the third quarter of FY23. I'll take you through the highlights of our express business first. For Q3 FY23, total tonnage handled stood at 287,000 metric ton as against 269,000 metric ton in Q2 FY23. Revenue from operations for the same period stood at rupees 379 crores, depicting a growth of 8% as compared to same period last year. Gross profit for the same period stood at rupees 105 crores as against 90 crores for Q3 FY22, registering a year-on-year growth of 18%. EBITDA for Q3 FY23 stood at rupees 21 crores as compared to rupees 16 crores for Q3 FY22, depicting a growth of 30%. For 9 months ending December 22, JKPL has recorded a revenue of rupees 1,113 crores, up 21% year-on-year. Gross profit and EBITDA for the same period stood at rupees 315 crores and rupees 60 crores respectively, as against rupees 247 crores and rupees 32 crores. GKPL has reported a pre-exceptional PBT of rupees 12 crores for 9 months FY23 as against a loss during 9 months FY22. We have witnessed improvement in EBITDA margin on a YTD basis. EBITDA margin for 9 months FY23 stood at 5.4% as against 3.4% for the last year. The margin improvement is on account of our sustained sales acceleration and cost control efforts. For Q3 FY23, tonnage handled by the Surface Express business stood at 284,228 metric ton, thus reporting a growth of 8% over Q3 FY22. Tonnage handled by Air Express business too reported a growth of 6% during the same period and stood at 2,443 metric ton for Q3 FY23. On a consolidated basis, GATI reported 9 months FY23 revenue of 1,308 crores as against 1,100 crores for 9 months FY22. Reported EBITDA stood at rupees 59 crores as against 30 crores for the previous year. Pre-exceptional PBT stood at rupees 11 crores for 9 months ending December 22 as against a loss for the 9 months ended December 21. I am pleased to state that net debt on a consolidated basis has reduced. It has come down from 152 crore rupees as of March 22 to rupees 72 crores as of December 2022. We remain confident on our abilities to tap the growing demand with GATI's wide network and digital advancement. We have been consistently providing other key comparative financial performance indicators in our investor presentation. One can refer that for more details. With this, I would like to open the floor for answers.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment. We take our first question from the line of Alok Devra from Motilal Oswal. Please go ahead, sir.
Hi, good afternoon. Just had a couple of questions. So first is on the demand trends. If you can indicate, although it's this quarter we have done pretty good volume. How is the demand trends been, especially in December and January? Because we are getting some mixed signals about some pockets witnessing some sort of a soft demand and others are doing pretty okay. Just some color on that.
So January, as you know, for the express business has generally been a soft month. I would say the softest. Basically, a lot of the organizations kind of those which close their books in December, restarting January, festive season getting over, etc. So January has been a very slow month, but February for the first few days has come back to the pre-December days also. So we are seeing a very good first week of February, and hopefully that should continue. Certain sectors, of course, are looking very positive, like the automotive sector, for example, looks positive, whereas there is a little sluggishness in the FMCG and consumables segment. But having said that, about GATI in particular, we are still a small market share player, and therefore we should be able to capture better market share in this last quarter.
Sure. And also, so we are done with almost 3 quarters out of this year, and we are targeting to clock around 9% to 10% sort of EBITDA margin by end of this year. So right now, if we just take the express business, we are at nearly 5.4% for the third quarter and 9 months. So any view on the outlook, or we still maintain the 9% number?
So basically, the way we are looking at that 9% number was more to do with normal operations. As you know, GATI has a lot of historic baggage that we are unearthing as we kind of continue our journey. My journey has been now 16, 17 months. And that cleanup is simultaneously required. On a normal basis, our gross margins in the business had gone up. They're now hovering around 28-29%. So we will end March with what we had said, which is 30%. But there is cleanup also simultaneously to be done.
Yeah, I mean, so that's my question was that only that so adjusted for the cleanup which is required, so 9% could be kind of more possible, could be more possible in the by mid FY24 or something, or I mean just some, because I think till last quarter we were pretty aligned to the 9% sort of a margin by end of this year.
Yeah, I would tend to say more in the second quarter of next year.
Got it. Just last question, sir. Any price hikes we have taken during, because last time you mentioned we would be considering some price hikes. Anything we have taken, because we have seen players like Blue Dart and all taking annual price increases. Anything we have done on that side?
Yes. So we have put out a price of 8%.
Okay.
The letters have been sent out to the customers, and our sales force is out there. We tend to kind of initiate the new pricing from 1st of April.
Okay. Got it, sir. If I have more questions, I'll come back in the queue. Thank you and all the best, sir.
Thank you. We take the next question from the line of Viraj Mehta from Equirius PMS. Please go ahead, sir.
Sir, thanks a lot. Sir, as you had discussed in the last call itself, we were looking for a margin closer to 9% by Q4. But now there is new evidence that you're seeing in terms of cleanup. Our worry as an investor is that if in the 5th or 6th quarter of your assignment you're still dealing with cleanup, how long can this cleanup last?
So, the point is that when I say cleanup, we are dealing with some very large customers where there is some baggage that is being carried forward, and it takes time for us as new management to be able to agree with that baggage that the customer has carried forward with GATI. We are dealing with it. and that is why the movement of the 9% from March of this year to say second quarter of next year. But there's a lot that has already been achieved. So I wouldn't say that this should take more than, say, we are shifting it by 1 quarter.
Okay. Sir, my second question is regarding the sales target that you had given in terms of when you joined and even probably till 3 or 6 months back in terms of the 3,000 crore target. But the volume growth and the value growth that we are seeing seems significantly lower than the growth targets that we have put for ourselves. Would you like to comment on that, please?
No, I would disagree on that. I think our growth targets are well in place. I will still continue to say that we will do 3,000 crores by FY26, which is the target I had set for myself. There is infrastructure that is coming up and that will accelerate our growth.
Sure. And sir, as far as expenses of the new 2 hubs that we have put in terms of both cash and non-cash regarding depreciation and new employees that we would have had, all of that has come in this P&L. So is that a fair assessment to have?
Yes.
So going forward, whatever is the gross margin that we'll see will come down to the PBT level for us. That is fair?
Yes.
Thank you so much and best of luck.
Yes.
Thank you. The next question is from the line of Mr. Ravi Mehta from Deep Financials. Please go ahead, sir.
Yeah, hi. Thanks for the opportunity. Just one question on the margins front that when we see sequential growth in volumes and even realizations per ton, was there some one-off expense in this quarter which led to lower sequential margins? Because even we have done good at the gross margin level you commented.
So, if it is a not ordinary cost of business expenditure, we will always show it separately. It's more to do with deductions happen because of historic baggage, I said, and therefore goes down.
And the customer mix was also same if I see on a H1 and 9-month basis, and still there was a higher realization. So is it the yield benefit that you were talking in the last quarter?
So over the last 9 months, our yield has definitely increased, but it has not increased to the extent that we would have liked it to increase. In fact, any new initiative that is taken always initially kind of yield with the customer. One of those which we took month was the e-docket. So I think we are the first ones in India to come out with the e-docket for the scale business. And when you do that, you generally tend to see nervousness amongst the customers because it's something new. And therefore, you lose a bit of yield and business. But then once everybody understands that it is for the benefit and brings about a lot of transparency in the business, business starts picking up again.
Okay, thank you.
Thank you, sir. We take the next question from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah, hello. Hi, sir. Sir, I would like to understand regarding the the demand supply dynamics of fleet in the industry. Given all the large logistic companies are adding trucks, at least in listed space, we understand they are either own asset or outsource. Plus, we see overall volumes of MHCVs in the country also growing very well. That would also be adding on the unlisted side. So, how do you see this entire freight rates and demand supply of versus the corresponding demand which will come over next quarter or 2 or 1 year? How do you see that?
So one of the major reasons for large logistics companies looking at bringing in newer trucks to the business is because of the infrastructure getting far better. And when infrastructure gets better, you rather have a new, more powerful asset that is put on the road than go with the old 8-year-old or 10-year-old asset. That is one primary reason of that change, not so much because demand is increasing in the market in a big way. I think it is more about getting yourself ready for the future demand, as well as being able to cut costs because of the number of turns that you can give the asset if it is a newer asset and has better power.
Understood. Understood. And sir, in terms of your own competitive intensity, how do you see that shaping up over the, currently, and your outlook on that?
So I think as our infrastructure is coming up, clearly see that our service is getting better, and that is one thing that brings confidence back to our customers and brings the brand back to where it was. We are still by far second player in the market, and the gap between us and the first player is tremendously high, and therefore for us, we concentrate on being closer to the customer and giving them better service, and our market share, as you know, over the last 9 months itself has increased by about 200 to 250 basis points.
Okay. And in the presentation, I have been noticing about when we give the timeline for starting a new hub. There is always a delay of 1 or 2 quarters since last two presentations I'm noticing. So this is happening because of what reasons?
Ease of doing business in India. No, that's no. Our Bangalore hub has got delayed now because of the monsoons in Bangalore. This year there was unprecedented rain that came in, and therefore construction work had to be halted. In Bombay, it was more to do with more on-the-ground local situations that arose because of us moving from 3 very old properties to a brand new property. So each one has its nuances, but then we also don't seize opportunities. So if you see my earlier presentations, for example, Guwahati was never there, but we got opportunity and we took that on,
Correct.
So it's a bit of both. But yeah, the ones where we have to build out in a big way and not get a ready-made place, these things do happen in India.
Okay. And sir, connected to this, now in the second quarter, the Mumbai hub went live in the third quarter, and then we had a full quarter of Nagpur and Guwahati hubs operational for the third quarter, right? Now, so with these 3 capacities, our volume growth quarter on quarter, is it as per your expectation, or you think it's not and it could have been much more? How do you think?
See, actually, if you look at it, Bombay hasn't even completed a full month, and we actually started operations in the beginning of January, if you look at it that way. And for the other 2, it's been kind of 2 months. Now, the point is we have to bring back that customer confidence that because of these new hubs, now service has improved tremendously, and customers wait and watch, So it does take at least 1 full quarter for a customer to get convinced and then give us loads to that area.
Okay. Got it. And so lastly, if you can share your strategy and share of revenue with regards to e-commerce, how it has been for the last 9 months? How do you see going forward? Any tie-ups you are doing, because that industry is currently not growing that well, but it's a great tailwind in the future and a big volume contributor to the express industry. So if you can share your thoughts on that.
So as I've said before also, and I reiterate that GATI does not do any B2C business. But e-commerce first mile is B2B, and we participate in a big way with all the 3 large players in e-commerce, including Reliance. So that's where we play, but we do not play in the B2C segment.
So when you say first mile, what will be the originating and the end point of the cargo for you?
So this is from the suppliers stroke vendors of Amazon, Flipkart and Reliance to their warehouse.
To the warehouses.
That's a B2B business.
Okay. So for example, the sorting center / warehouse for Amazon.
Yes, correct.
Okay. And how is, in terms of profitability, how is that compared to a regular B2B business, like regular express business, what you do?
So it depends on the size of the vendor stroke manufacturer that we pick up from. If he's an SME customer, the profitability is better. If it's a large customer, the yield will be lower, but our cost can reduce. So that's how it works in our industry.
Okay. And sir, at the 3,000 crore top line, what sort of ROC would you be targeting?
I will let Anish answer that question.
Sure.
ROC would be in the range of around 20-25.
20 to 25%. Okay. And how would our debt on the books and all would look as of currently and going forward? How is that going to be?
So the net debt as of December is 72 crore rupees.
Net debt.
So this is basically offsetting the GATI's cash and cash equivalent.
Correct.
Which was 154 crore rupees as of 31st of March 2022.
Okay. Understood. Okay, great. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. We take the next question from the line of Ash Shah from Elara Capital. Please go ahead.
Good evening, sir. So one question was that in the results in the segment assets and liabilities, there has been a drastic increase in the unallocable assets and unallocable liabilities. So could you provide the reason for the same? I mean, it was not there in the previous quarter, but it just appeared in this one.
Anish, would you like to take that?
Can I get back to you maybe after this call, because I just need some. Yeah, I'll get back to you actually on this one. Yeah.
Also, the second question is, can you provide any, update on the fuel business? Is there any materials in that that is worthwhile sharing or something?
Fuel business, there is no action as of now. It's continuing as it is. We're just kind of awaiting the approval from the ministry. We are yet to kind of get the approval from the ministry.
Okay. And is the KWE transaction over completely, or there's any, or when will it get over? If
please carry.
Yeah, the KWE transaction is not yet over, but the All Cargo, the shareholders kind of decided to kind of buy out the KWE. The transaction will get materialized, in the coming quarters.
Okay. Yeah. Thank you. That's all for myself.
Color to that, the agreement of price is done. It's only the paperwork which is now pending, and we believe that in the next quarter or so, we should be able to consummate the deal.
Okay, thank you. That's all.
Thank you. The next question is from the line of Saloni Hemnani from Molecule Ventures. Please go ahead.
Hi, sir. I just have a couple of questions. First one, starting with Faruk Nagar Hub. It's been a year since Faruk Nagar Hub has been basically launched. So, but the growth in terms of volume and margins have almost stayed flat. So the volume growth year-on-year has been 7 to 8%, and margins have stayed 5.6, 5.5. So how much impact has really come from the new hub?
So if you divide our business into 4 zones, that is north, south, east, and west, our fastest growing zone in the last 9 months has been Faruk Nagar, which is north zone. We have seen a little slower growth in south and west because of the infrastructure. Now with Mumbai coming in, west will also grow at a faster pace. So what you see as the growth number is the total growth of GATI, but zone-wise, north has grown much higher than the rest.
Okay. And sir, one of our competitors recently reduced their sales growth outlook, and so it has been reduced downwards. And so, what kind of sales growth are we estimating for the next year? Just to get a clarity on that.
So I would put it this way that we kind of assume that the market grow at 10 to 11%. And for us at GATI to be able to grab market share, we need to grow at least 1.5 to 2 times the market.
So are we assuming 15 to 20% sales growth?
Yes.
For the company? Okay. So last quarter, the assets held for sale was around 94 crores. So what is the updated number for that?
Sorry, I did not the question. Can you repeat it, please?
Yeah, the asset held for sale last quarter was 94 crores on the books. So what is the updated number for this quarter as on date?
Anish, would you like to answer that? Asset held for sale. Anish?
Yeah, I'm sorry, I was on mute. So we have sold close to 29 crore rupees from out of the non-core asset during this third quarter.
How much, sir?
29 CR.
29 CR. Okay.
Yeah, right.
Okay. Thank you so much. I'll get back in the queue.
We are left with 5 or 7 properties.
Okay.
And out of that one big property is there. We all kind of already identified a buyer for that property.
Okay. Thank you so much, sir. I'll get back in the queue.
Thank you. Before we move on to the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. We take the next question from the line of Mr. Aman Vij from Astute Investment Manager. Please go ahead, sir.
Good afternoon, sir. My question is on the volume side. So if you look at last 2 quarters, on the express side, we have grown volumes at around 9%, given a bigger base. For the 9 months, we have grown strongly, but I'm talking specifically of last 2 quarters. So going ahead, do you think this is the number we should take as volume growth and plus 5-6% price growth, which will lead to 15-20% growth, or do you think volume growth? What do you think can be the volume growth for say next year?
So this quarter-over-quarter growth is not the correct number to be taken because there was a Diwali quarter, which was the previous quarter, September. We had Diwali this year, and therefore the growth over the quarter is lesser because that quarter had high growth. The growth has to be much higher. The volume growth has to be much higher than 9% for us to be able to achieve our revenue growth.
So do you think it will be closer to 12, 13, or it will be even higher than that, 15% plus volume growth over the next 1-2 years, which we are targeting?
It should be in the mid-teens.
Mid-teens. Okay. So my second question is on the express side, air express side. We have seen a lot of competition coming in, even some of the customers starting their own air services and wanting to scale their logistics business like they've done globally. So have we started seeing any impact in terms of pricing or volumes? And the second sub-question is, do you think this will lead to more competition in road expressway? Because some of the players who have been dominant in air express will face competition in that, and now they won't have any other option but to maybe focus on surface express. If you can share your thoughts on these two things.
So first of all, for GATI, air express is incidental. Our main line of business is surface express. We like air express only because we get 6x the yield, but we do not control that product because we don't have any dedicated aircraft running for us. The advantage that we would have is our existing surface customers, when they have one-off air business, they don't want to go to another service provider. So if we give them the right service, they will come to us. Coming back to the second part of the question of some of our competitors having their own airline, I don't know which competitor you're talking about. If you're talking about Amazon, Amazon is not a competitor to GATI in any way. Amazon is a platform. They have done whatever they have done to move their own business over there. Having said that, it in fact creates opportunity because space gets released from other airlines, and therefore we will get space at a better price than what we used to get because of Amazon's load moving to their own aircraft.
Sir, I was talking about, for example, Blue Dart, who has been focused on air as of now. With more competition coming in air, will they now need to focus on surface more, which will lead to more competition in service, surface expressway?
Well, I do not want to really even conjecture on this one. If you read the newspapers, they are bringing in 2 more aircraft very
soon. Sure, sir. These are the questions from my side. Thank you.
Thank you, sir. We take the next question from the line of Abhijit Mitra from Alpha Investment Managers. Please go ahead, sir.
Yeah, thanks for taking my question. I have 3 questions actually. Firstly, regarding the top-line guidance of 3,000 crores, have you included the contract logistics business of all cargo in that now? Secondly, there are 4 sorting centers which have come up. There are 5 more sorting centers yet to come up. So if you can tell me the volumes that are being handled in those 4 sorting centers currently or in this quarter. And with those 5 more sorting centers coming up, where will the depreciation and the interest reach finally? I think you gave a number, it will stay flat, but it looks unlikely given that 5 more sorting centers are coming up. So I think proportionately, at least the depreciation interest also should go up. And lastly, depending on the answer to your first question, I'll have a follow-up on that. Thanks.
So let me correct your understanding first of all. These are not new centers. We already have centers in all these places. What we are doing is we are consolidating centers or making very good cross docks, which were not available in GATI. It was more like you had a sort center, then you ran out of space, so you added 1 more, and then you added 1 more, and therefore the truck had to dock at 3 different places to unload and then get loaded from 3 different places. So now what we are doing is we are consolidating those and creating a new state-of-the-art cross dock. So it is not new. So the loads are already there. They are already being handled at the old cross docks, but they are old. They are not efficient. So what we are doing is we are replacing them with efficient cross docks. And therefore, there will be, of course, incremental load that we get because we better the service, and therefore customers will give us more load for those areas as destinations as well as from those areas as origins. So that is an important point for you to understand. As far as loads are concerned, the loads at Farrukhnagar have gone up by 25% in 1 year. I do not want to give you the loads because of the other three because, like I said, we have not even completed 1 quarter with them, so the loads have not really shot up still. But I would expect anything between 20 to 25% the load going up as we open up and as we mature those hubs.
Okay. And, just to follow up on that, see, in that case, the depreciation should have gone up with these 4 sorting centers also coming up, right? But it did go up, and it continues to move up. So there has been some incremental capital employed also, as one of the previous participants also mentioned, in other, unallocated assets and liabilities both. So you can, of course, verify on that and come back to me later. First question was regarding the source of top line, whether, you are including the contract logistics business also in that, or you are purely focusing on the ground express pie.
So whatever I give as a GATI revenue will be whatever activities GATI perform today and tomorrow in GATI.
Yeah. So in that case, the implied volumes area, if I include or if I keep the yields constant, is almost 30%. So given that we are growing at 70%, where first of all you're getting that confidence of 30% CAGR to grow sort of each quarter on a YOY basis by 30%. And when do you feel that you can see this kind of inflection? Because Q4 doesn't seem to be that quarter. So by when do you feel that, you can...
Let me again correct you. 9 months we have grown by 22%.
Yeah, that's because Q1 was a weak base or had a weak base. But if I exclude Q1...
That's not how we look at it. We have grown 22%. We are in infrastructure and we are confident that we will grow.
Got it. Thanks. That's all from me.
Thank you.
Thank you. We take the next question from the line of Mr. Bhaskar from RCI Investments. Please go ahead, sir.
So thanks for taking my question. One clarification on the margin front. You mentioned that a lot of work is in progress, and therefore what you stated to achieve in Q4, you're probably shifting it by a quarter or 2 quarters. So given that probably if you achieve around 10% margins in Q2 next year, would it be safe to assume that even for the full year, you'll largely be able to do 10% because once you hit that, then that run rate sort of continues?
Yes, absolutely. Once we hit that run rate does continue. It only has to get better with the growth in top line.
Right. And so you mentioned about your target of doing 3,000 crores by FY26. Assuming you hit that, and I'm sure that you're taking a lot of efforts to do that, what sort of margin do you think that you will be able to achieve at that scale? Because I'm assuming a lot of operating leverage and a lot of other benefits will start flowing in at that sort of a scale. So would a 14-15% margin be possible at that scale?
I would look at anything between 12 to 15.
12 to 15. Okay. Got it. And just to understand that this margin trajectory moving from 5-6% to 10 in the near term, which is by Q2, if you can help understand a bit in terms of what exactly will drive this whole margin up to.
So it's a combination of two things. One is definitely the gross margin has to grow to 32%, which is where the good players in the market are. And secondly, the top line has to grow to leverage the fixed cost.
Okay. Okay. And the gross margin improvement largely comes from product mix in terms of more SME or pricing, or what exactly, if you can?
So mainly from operational efficiency and partly from yield. Why I say operational efficiency, but like I said in my speech, we have just undertaken a full-fledged RFQ on our network. We already see shoots of good pricing coming in.
Okay. Okay. Would your SME mix also go up over a period, given that you're focusing a lot on that segment?
The problem that I see in the last 15 months is every time I grow my SME, my key accounts also grows, and therefore this mix is becoming a little kind of difficult. But yes, our focus definitely is to grow and retail.
Got it. Got it. Sure, sir. Thanks a lot. That's all from my side.
Thank you. The next question is from the line of Dhwanil Desai from Total Capital. Please go ahead, sir.
Hi, Phil and team. Good afternoon. So the first question is, on volumes, we barring Q1, we are growing at 7-8% kind of a tonnage growth. We are around 270 to 80,000. Now, from here to go to that mid-teens kind of a volume growth, do we need all our hubs operational? And since already 4 of them are operational, can this 7-8% move to 11-12%? By the time other hubs become operational?
Yes, absolutely. So we don't have to get all the hubs operational to grow. We will grow from the 8-9% to the 10-12%.
Okay, got it. And Phil, the second question is on the margin that I think you discussed a lot on this. The only question that I have is now that this 5.4 to 9 trajectory, will it be step-by-step improvement, or will continue around this number because of the legacy issues, and then in Q2 those things will get resolved and margins will improve?
No, it will be a step-by-step increment, and you will see it.
Okay. And this legacy issue, can you give slightly more color? Is it because we have to give more discount to the customer because of the legacy issue, and that is what is dampening the margins?
No. So the problem we face in GATI is that the customer says there were certain commitments given by the past management which have not been kind of honored, and there is nothing in the contract. So that's where the problems arise. But at the end of the day, the customer is always right? So we need to kind of come to a conclusion so that we can carry on and do more business with the customer.
Okay. So this thing will last for a couple of quarters with your estimate?
Yeah, I think at least for one more quarter.
Okay. Got it. Thanks.
Thank you. We take the next question from the line of Neelam Punjabi from Perpetuity Ventures LLP. Please go ahead.
Yeah, thanks a lot for the opportunity. Question is on the gross margin. So if I look at the express business, the gross margin on a sequential basis has declined by about 100 basis points from 28.8% in Q2 FY23 to 27.8% in this quarter. So could you highlight what is the reason behind this?
Don't call me a parrot, but you're making me repeat the same thing again and again. I've answered this 3 times now. This is because of certain deductions that we need to give to the customers for past commitments made. It is not the operational gross margin which has reduced.
Okay, thank you. And secondly, could you give a timeline for the fuel station divestment?
If I were to be able to predict the government approval process, I could have given you the timeline, but I'm sorry, I cannot give you a timeline. We are dealing with the government for permission.
Okay, great. Thank you.
Thank you. The next question is from the line of Surbhi from BWC. Please go ahead.
Yeah. Am I audible?
Yes.
Yeah. So my question to you is, most of the questions got answered. Last question that I had was, how big is this customer for us where we are facing this issue?
We mainly face these issues with the large customers only. So it's not one customer, there are a few customers.
So, I mean, what percentage of our revenue would be coming from them? A broad ballpark number?
Oh, very difficult to answer that, but should be at least 20% of our revenue.
Okay. Okay. And you expect this issue to get resolved by next quarter?
Yes.
All right. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
So thank you everyone for attending this call. If you have any more questions, you can either contact Sanjay, who heads our investor relations, or our external IR partners, SGA. Thank you very much.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.